and purchase at the lower level. Maybe this level. All right, since we have covered trend lines, this support might be a new resistance level in the future. All right, since we have covered trends and channel, I would like to talk briefly about support and resistance support. All right, since we have covered trend lines and channels, I would like to talk briefly about support and resistance lines. This picture just shows you where the price action was finding some significant price action reversals. Like here, in this price range, the price action couldn't break down, finding a support or resistance in some time frames, like here and there. Usually, when the price breaks the support, this support might be a new resistance level in the future and vice versa. Resistance line can become a new support. So here, let's look at the NEO against the Bitcoin. NEO BTC parity. Those levels that I have drawn can be very important price levels that you would use to determine where to sell or buy this particular asset, which is NEO. As if you had entered the game here, as I did, you would expect the price to bounce down. So let's say you have entered the game over here. And over here, you would expect the price to bounce down. If the price level is broken, you could open a swing trade by buying it at that level and maybe selling it when it reaches this level, as I am planning to do. Usually, previous all-time highs are the key resistance to look for. Maybe if the price reaches that point, you would sell a portion of your portfolio and then carefully analyze price action for the next few days to see if the resistance is broken. If it is, then it's good for you, and it's most likely that it will reach a new time high. However, if it's not, then you would sell it and purchase at the lower level. Maybe this level, or maybe if it falls further down, then you would buy more at a lower level. By cost averaging your position. I will try to cover this strategy in the next few videos. So basically you would purchase some over here and you don't know if the price action will find a support over there. Maybe it will break down further and then you will buy again at that level. So instead of buying at this level and losing money in the short term, you would cost average those, and your level would be, your price level that you bought it will be averaged to that kind of level here. At the end, I would like to mention few patterns that are usually commonly used, like head and shoulders, double top, bottom formations, cup and handle formation, triangles, or flags. I'm not going to cover them now, but in the future videos I will. Also, if you would like to go ahead and learn about them, this would be a good idea. Probably going to Investopedia or like Wikipedia, or just Googling those patterns would give you some insight about what those patterns means to you. If you would like to start learning about them, I would probably go into Investopedia or maybe Googling those patterns. Also, there are some indicators that are commonly used by short-term traders, like RSI, Relative Strength Index, on balance volume, MACD, DMI, or moving averages. It is worth mentioning that many trading bots that are using different strategies, and most likely those trading bots are using strategies that are based off of those indicators. But I think this will be enough for my video today, and I would like to talk about those indicators in the future. If something interests you, you can comment below and I will know what to cover first. On my last slide, I just want to mention some other important concept that will help you understand TA even better. That will help you understand TA. You should read into them if you have time, like Dow theory, Elliott waves. The last one is about efficient market theory, which opposes and challenges the TA concept. Wikipedia would be a good way to start.